Hey, what's going on YouTube? Mike here from Health and Wealth. This is take two. Actually, I already recorded an entire 17-minute video with a walk around the block, but I realized I hadn't shaved properly, and I had a big blotch of hair sitting right here for the entire video. So take two of what I was talking about. So let me try and recall. So the reason I'm here today is just to kind of talk to you about how I started in the investing world. So, essentially almost 4 years ago, August 1st, 2020, Apple was looking to do a 4-for-1 split. And my dad, who has been investing for a long time, worked for a company. He got, stocks from that company. He said, why don't you give me some money and we'll split it. We'll use his account and we'll go from there. And I said, okay, sure. So I had just happened to have, money that I had been saving up through work sitting in my account. So I shifted some of that over to him, $10,000 Canadian. And we went splitsies. So 20,000 Canadian into Apple, probably a couple days, a month before even the big stock split. And so I remember the time really well. We were, whenever you do something new, you just get obsessed with it, right? That's the way I am. I'm sure a lot of us are the same way too. So I ended up watching the stock market like crazy, and hitting that refresh button on Apple. But I was also looking at Tesla too. I don't know if you recall at the time, but Tesla also had a large split. I don't know. I think it was 4-1 or 5-1 there too. And because of that split, Tesla skyrocketed. Massive gains there. Apple kind of went up a little bit, but not as much. So I kept my money in his account for, I'm going to say, 4 or 5 months. And then I determined that I want to do this. I had been watching some YouTube videos. There is a guy named Zip Charlie out there. I followed him on Facebook and all of those different branches there too. And so Zip Charlie talks a big game. He goes through charts, and typical YouTube, right? So you're following YouTube blindly, and did a whole bunch of purchases there on my own account over at Questrade in Canada here. By the way, if you want to get started in investing, you can use my link. We both get $50. It's pretty awesome. I'll put it down in the description below. But so I followed him kind of blindly. I bought a few companies that he recommended: ChargePoint, Aster, ASTR, Rocket Mortgage, just a few, SunW, SDNL, Tilray. These are all companies that were recommended, and they were more for day trade purposes on his genre. But as a new investor, you don't really see that, right? And you don't know what to do, what not to do. And so what I did was incorrect. I followed that and ended up losing money overall. So that wasn't a great start to my investing journey. So I stopped doing that and started doing a little bit more research on the companies that I invested in, which was a good decision. And I started watching more YouTube videos from other people. And I really like the entertainment version of it. You get some good personalities out there. I hope that I grow on you. I get the personality out there on these videos. Always the first couple are a little bit, what's the word? Embarrassing. That's a good way of saying it. So, anywho, I went ahead and started investing in more reputable companies. Actually, my uncle said to me, I told him all these companies I invest in. He goes, now, which one of those is profitable? And so we went through the list. Not one was profitable. They were all, growth stocks, hopefully growth stocks. And retrospectively, we look back and all of them are failures in terms of if I had left my money in there, they would have all been failures for sure. So not good, right? So that's how a lot of people start. I like to call them like gambling. A lot of people gamble stocks, GameStop, Diamond Hands, AMC, things like that. And that's how a lot of people start, because they're the flashy things. People on Reddit are saying, "Oh, you got to buy this, you got to have this," and so now I want to be a part of that too, right? And I get it. I get it. It's nice to make money quick for sure. I'm with you. I'd like, if I could retire now, I would. But as I sit here on lunch from work, I still got work to do, right? Still got work to do. So here's my plan. Every couple of weeks, I put a little bit of money, not a lot, but 10% from every pay goes into my investments here, and then my company does a little price matching for my RRSP, so a little bit goes into that as well. And so in total, about 20% from every pay goes away, which is good. Now, here's the problem. That 10% that I take from my pay is not automatic, which means that there are times where I'm not putting money in to my investments because, I've spent that money elsewhere. Costco is a huge expense of mine. I use it as a grocery store, which is a terrible idea. My average bill is like $189. How about you? Do you guys do the same thing? How much do you spend at Costco? You can, if you looked at my credit card bill, I'm there a couple times a week. Bad idea. So that's going to change. Back to the grocery store for me, so that I can afford more of my investing. So what am I investing in these days? So these days I am big into the ETFs. So if you looked at my portfolio, I did get roped into GameStop the last little swing here. So it's just sitting there. It's not a big portion of my portfolio at all. But I do have a lot of a company's ETFs. This company is called Yieldmax. Yieldmax is relatively new. They've been around for, I'm going to say, almost 2 years. So it's a relatively new platform. And so basically what they do is they write synthetic options, cash secure puts, cash secure calls on underlining companies. So the first one that I got into was Tesly, TSLY, on the stock ticker symbol. And this was a company that wrote cash secure puts and calls on Tesla. Now, I'm a huge supporter of Tesla. I think Tesla is going to be a massive company. It is a massive company. I think it's going to be even more. It's not just a car company. It's a robot company. It's a automation company. It's a home power company. It's a battery bank company. It's got everything, right? So Tesla is just massive for sure. So Tesla did pretty well with that. If I ever show you my dividends I made, that's the most dividends I've ever made was with Tesla. But the downside to that was there's this thing called NAV erosion. So because Tesla just sat flatlining like this for a year and a half, it seemed like, Tesla also flatline, was paying out a pretty juicy dividend or distribution, whatever you want to call it today. And because of that, the NAV eroded. It went down every month, so much so that they had to do a reverse split. And so I made a few videos about buying Tesla, and they're in my on my channel right now if you wanted to go see those. I was pretty pumped until that reverse split. And I thought, when is Tesla going to do something? And I just got kind of tired of it sitting there. And I took my money and I went on to another ETF. So, that's investing, right? You want to invest in the good things, and you want to invest in things that will make you money. And if they don't, have yourself a stop loss and pull the plug and move on to the next thing that you think is going to make you money. So my next thing that I thought was, I'll hold off on that for a second. I'm going to just say that my strategy here is to build a castle, build a castle of financial wealth. And it's going to be a slow process, but I want to get there as my goal. So to do that, I want to have 6 pillars of dividend income coming in every single month. So I'm thinking of these pillars, and what I want them to do is produce $500 a month for each pillar. $500 a month for each pillar, and then build my castle on top of those pillars. So pillar 1 is NVIDY, NVDY, which is arguably the best ETF in Yieldmax. Don't take that from me. I'll go ahead and put some screenshots of its projected payout for the year. It's unreasonable, just so you know. A lot of people say this is a terrible idea because, it's a yield trap. And you're going to see some of those comments below. I'm with you. I hear you. I hear you. And mistakes can be made here for sure. But I really, really personally like it. And who am I? I'm just a guy, right? Sitting out on his back patio here on lunch break. But I like it. I like it a lot. And I'm okay with the risk personally, with the kind of returns it's come out with. So NVIDY, which is an ETF, and its underlying stock is NVIDIA, which is, the last couple of months have just skyrocketed in price. And so that has helped NVIDIA, its price, and its distributions as well. So I'll go ahead, put the distributions over the last number of months up here on the screen. Enjoy that. And I'm also going to go ahead and put its projected return here on the screen right after that. So you can see, I think this last month was $2.45 for a distribution. If you have 250 shares of it as an example, you're doing really well with your first pillar. My next pillar that I'm working on, and I'm taking every single cent of dividend that I get in the month, and I'm putting it into my next pillar. And that's how it's going to go. We're going to snowball, which is a fun term for building bigger and better distributions every month. I'm going to snowball that dividend from NVIDIA into Misty, MSTY. And this one is a Bitcoin player. So Misty, its underlying stock is MSTR stock symbol. MSTR just recently, a couple days ago, announced that they're going to do a 10-for-1 stock split. Massive. This company has gone up, I think, $400 in the last few months, which is crazy. And when I say it's crazy, I'm thinking, can Misty keep up the pace of the distribution that's paid out? So again, I'll put that on here. Take a look at the screenshot for distributions Misty's paid out. Even if it paid out half of what it does right now, I would be really, really happy. Even a quarter of what it pays out right now, I'd be really happy for sure. But yeah, big fan of the two of them. So far, they've been quite good to me. And so I'm just currently building pillar number 2 right now. I haven't thought too far in the future about pillar number 3. What would you guys recommend for pillar 3? There's Coney. That's another Bitcoin player. Coney is a good one. It's almost paid out 100% already in its existence, which is incredible. AMZ is a good one. Who doesn't believe in Amazon? Amazon's an incredible company. It pays out about 50% a year, so it's quite a bit less than NVIDIA and Misty, but might it be more sustainable? That's the thought process there. So that could be a good one. AMZ could be a good one. There's also companies from, not outside of Yieldmax. FEPI, FEPI is a good one. And their marketing team has done a really good job with reaching out to people. And, they reached out to me. They actually sent me a t-shirt. So have they bought my business? I'm not sure. I'm going to have to look into it. I just briefly looked at their website. FEPI, FEPI pays over is an ETF, and I think they have 78 different companies that they that are in their portfolio that pays out a dividend, and that pays out 25% a year, which is pretty incredible and probably sustainable. So that could be a good one as well. Back to near the beginning here of when I invested. I invested in a couple Canadian ETFs, HYLD.to, for my Canadians watching this. It's been steady. And so when that ETF came out, it was paying 10%. People said, oh, stay away. 10%, stay away. It's a yield trap. It's true. I'm with them. I understand why they're saying that, but it has been really good. It's when I bought it, it was in the $11 range. Now it's in the $14 range, Canadian, mind you, um, and it pays out I think 14 cents per share every month, which is great. It's great, but that 14 cents isn't going to help me retire anytime soon. So I'm sticking with the high yield ETFs for now. I want to build that castle. Um, I haven't even looked to see when that might happen, but I'll tell you, the last 4 months with the distributions I've gotten, it's got me really excited about the future of investing. I think these things are here to stay. I think they're great products by Yieldmax. Um, but don't take advice from me. I'm just a guy sitting on my patio. I have no financial background. I'm just here for entertainment, create some videos, some entertainment for you. Just a guy to talk to, the sound, to be a sounding board for you. I know at my house here, my other half, she gets tired of this kind of talk. So I'm really just here to chit chat with you guys. What are you investing in right now? What do you love? What do you not love? What is your passion? A couple other goals of mine that I mentioned yesterday in my video, looking to get 10,000 steps a day. So if you had to watch my last video, which I didn't post, by the way, because I trimmed incorrectly, I had 17 minutes there of walking around the block. It is hot here in Ontario today. So I'm getting my outdoor time here as well. And the goal is to get 1,000 hours of outdoor time. So for a guy that works in an office all day, that's a task. So plan on being out here a lot. Something else I'm passionate about, if you want to get to know me a little bit more, just some guy on YouTube, is gardening. So let me walk through the backyard here. Here we go. And can I flip this over? There's the garden. Growing some corn. Got some butternut squash going up here. Got some peas. What are you guys passionate about? What's your hobbies other than investing? Got some Brussels sprouts going on over here. Got a couple tiny little cantaloupes, but they have sprouted up quite a bit. Got some tomatoes growing. A lot of tomatoes growing, actually. Finally got one coming in right here. Right there. And then we got some cucumber coming in. Carrots over there. Pile of dirt with a flower growing in it. Beautiful. Anyways, I don't want to waste your time, guys, with these YouTube videos. I want them to provide you value as well. So follow along. I'm going to go ahead and jump onto a computer here, kind of go over some of my Yieldmax, talk about my goals. I think down the road it would be awesome if we can grow a community together. If you are new to Yieldmax, we have many resources out there that I watch. Retire on Dividends, Rod. I think his name is actually Mark. Awesome videos. It's actually part of my new religion, is watching his videos every morning. And then you got Meet the Kramers. Really good message there too. He is pretty passionate about investing in dividends and retiring. And I think he is up to about $9,000 a month in distributions. Now he is very diversified, and he shares his as well. So that's the goal, right? 6 pillars. That's the goal. 6 pillars, and then we diversify from there. We go ahead and buy our stable, profitable companies after that. Anyways, if you're still here, thanks so much for hanging out with me for the last 19 minutes. I appreciate you. If you can hit the subscribe button, I don't ask for it too often, but I'm looking to grow this channel. And every new subscriber, everything in the chat will help this channel produce a better quality picture for you. So I hope you have an awesome Friday, and thanks for tuning in. Bye now.